Have you ever wondered why price reverse is constantly at a certain level? Now, I know you think it's random, but it's actually not. It's literally based on what we call a fair value gap. And a fair value gap is very important in the market. So if you don't understand it, this video is meant to explain it so that you fully understand and you can actually trade it with a lot more confidence on the charts. So if that's something that you're interested in, grab your pens and your notepads and let's get locked in because I'm about to blow your mind with the data from this video. Let's get into it. Welcome back. If you're new to this trading space, you know it's Kaale, and listen, this is where I take you from zero to profitability land. So if that's something that you're interested in, go right ahead and hit that subscribe button. What are you waiting on? Don't you want to make some money with Kerry? If that's truly what your goal is, then come on, subscribe. It don't cost you nothing. With that said, the link to the free Telegram hub is down below, and you have the ability to come trade with us within that Telegram for absolutely free for the month of September. So what are you waiting on? Click that link and hop in to our Telegram hub and we'll connect with you. Let's get into the video. All right, so we're literally starting off with what is a fair value gap. We call them FVG for shortening. It's literally a gap that happens when price, moves so quickly in one direction that it leaves behind what we call an imbalance. This is where buyers and sellers didn't transact fairly, right? You're really looking at a 3-candle pattern system where the middle creates a gap between the wicks of the first and the third candle. That's all it is. It's literally showing inefficiency in price delivery, and this is where market tends to revisit. Because it creates inefficiency, this is why the market tends to retest these levels to fill the gap. Now, I know the question you're probably asking yourself is, why do fair value gaps form? Now, this is simply due to what we call supply and demand. And I've got a full video that outlines supply and demand. I've linked it here so that you can go watch it. But really and truly, if you've got big institutions coming into the market, they're going to be leaving their footprints. They're either going to be pushing price aggressively down or pushing price aggressively up. In this case, right here, where you can see, you're literally seeing that we had an aggressive push down, and I'll highlight what we call our supply. In this case, it would literally be here, which is that previous candle before the massive push down, and we'll put that as a supply zone, right? And this is where the banks, the big institutions, they leave their footprints because of the fact that you have all this aggressive move coming from this level. Retail orders are left unfilled and imbalance is created, right? So think of it as what we call smart money displacement. Literally, you're looking at all of this and it's like we're skipping a stairs and we're just jumping instead of taking the stairs one tread at a time. Right? You have to understand that there is a big gap right here in the market, and this would be your fair value gap. So you've got a 3-candle pattern system. 1, 2, 3. 3 lovely bearish candles. Now, based on the wick of the first candle and the wick of this third candle, this bit is what we call an imbalance. And I'll use another box here to highlight it. Right here, from this wick to this wick would be our imbalance. And all I need to do is to say that, okay, let's create a template for that. And we'll say fair value gap, FVG. And we'll save it, right? And we'll have the ability to tap into it and even edit it, right? To make sure that we do have fair value gap. Right, and we put it in, let's say this is green, and we've got that bit right? And our background is like that, right? So you can do it however you want, just showing you that this would be your fair value gap. And we could decide that we want to put the text to the bottom section, or it could go to the right. Either way, we just want to make sure it's there, right? Or it could be inside, right? And it could be center. Fair value gap. Right, so the wick of this previous first candle and then the third one is what creates the imbalance. Another word for fair value gap is literally imbalance. Now, what do we expect to happen here? If it is that we've got all this aggressive move, right, in this area, and price potentially comes back into this fair value gap, you could potentially have price pushing further down from this structure, right? So we could get a continuation once we tap into the fair value gap, right? And we're getting wick rejections, we're getting, bearish engulfing candles. That could be an indication of another bearish setup. That is absolutely plausible. A lot of times we don't need to chase this, we just need to wait on it to come back and retest structure. And if we look to the left, there is a potential that price could come all the way here within the fair value gap and then actually, coincide with market structure with this previous support, make it resistance, and then of course it could drop further, right? So that's literally what a fair value gap is. It's basically the imbalance, the inefficiencies within the system. Now, how do we spot this? It's simple. Look at the 3 candle pattern. That's what you're looking for to find the strong displacement candle. In this case, this would be our strong displacement candle, and you mark the gap just like I did. Take your rectangle out from the wick of the first to the wick of the third. You mark it out, and you could, save this template as fair value gap. And that's literally how you do it. Now you can look for these on your 1 hour time frame, your 4 hour time frame, your daily time frame. You can even go to 30-minute time frame, 15-minute time frame. But of course, the higher the time frame, the stronger that imbalance for price to trade into it and then continue to give you that plausible setup for your trade to play out in your favor. All right. So I hope you're making notes based on what I'm literally showing you. So let's see if we can find a plausible setup based on this structure so that you see how it works. All right, let's see. Now, in the case of this fair value gap, you can literally see that price did not even come where we anticipated, which is like right there, and at least give us a wick rejection. It didn't. So we fell a little bit short of this bit, but it happens, right? And so you may have had a sell limit order right in here, or you're waiting patiently. But what price did instead was to react to market structure, which is this previous level right here. And it happens. So this one didn't follow through and trade directly within the gap, but let's find one that actually followed through. Let's see. All right, so we're on gold now, and we've literally seen this 3 candle pattern, 3 bullish candle pattern. We know gold is in an uptrend, and we're seeing this level of imbalance based on the wick of this first candle and that third candle in the 3 candle pattern series. So we'll come here and we'll bring that here, and we'll kind of make sure that we're tapping the wicks from wick to wick. We're marking out the inefficiencies, and we'll just make sure that this is our fair value gap, right? And we'll get that template locked in, fair value gap, right? So this is our fair value gap. What we're really anticipating is that price will trade back within this and then give us the ability to take the market higher. So let's see if we can get a plausible move based on this. We're not going to be chasing, but we're allowing price to do its thing, and we're waiting on it to come back and get us in that gap, right? So we've taken off. Whatever goes up must come down, shouldn't it? So this is a lovely one here. Perfect. Absolutely perfect. As you can see, we are in the fair value gap. Now, if I take my horizontal line, one of the other beautiful thing is we've almost retested this previous wick level as well. So it's absolutely beautiful us pushing into this fair value gap, rejecting off of it, and then this is where we take or buy. So we could be looking just to trade back into this level and beyond because we know we're bullish, right? So we are basically trading based on structure, right? Or stop loss could be there. We could take profit 1 there. And of course, if you know me, I love 1 to 3. Right? If I don't get it, I'm fine with that. I just want to be able to make sure I get something that's worth the risk. So this is what the setup would look like. We just put our stop a little bit below there, right? Because we don't want price to be coming through the fair value gap. It should just, wick in that level and give us rejection. We want to see that rejection wick and be able to take that move and make it a plausible setup. This is how simple it would be, and taking your profit, right, as price moves in your favor, right? So we're moving smoothly into some little beanie bits of profits. We're there at take profit 1, right? And we're continuing to push. Let's see how further we get. That's nice. Perfect. So right at this moment, this is where we are in the market, and we're still going, and we do anticipate that gold will come further up and get into that level, at least up to 3,700, because we normally use our Fibonacci and we normally have that structure. Now, whilst we're in this trade, we've gone 3/4 of the way. All you're doing is locking in your profits, taking some off the table, and being in it risk-free while you hold. That's literally it. So you're looking for fair value gaps, which are the inefficiencies, and you're setting a trap at these levels to be able to take a move. Once price comes back there, you're looking for wick rejection, ideally engulfing candles. You could basically have your wick rejection as your core part. This was not a bullish engulfing candle, but a candle that's bullish, showing you support at this level is plausible enough, and you would have taken a move and you would have made profits, right? And there are many others that we can, go back test the data. Remember, everything that I give you here, I love if you go back test it, because that's how you prove that the system actually works that I'm giving to you. All right, there are so many inefficiencies that you find in the market from time to time, and you're able to trade these to make a profit, right? So this is a simple system that you can benefit from to be able to find plausible setups on a daily basis within the market, right? So I've given you what fair value gaps are, how to spot them on the market with the 3 candle pattern system, actually drawing them up using your rectangle boxes, and of course how to trade them. Right? So if you got any value from this video, make sure to smash that like button, subscribe because it don't cost you nothing, and drop a comment, and we'd be happy to cover whatever content you would like some clarity on going forward. With that said, remember to put God first in everything you do, because if he's in it, without a doubt, you must win it. With that said, I'll see you in the next tutorial. Make sure you watch the supply and demand video that will give you even clarity on how to identify supply and demand zones.